It's been absolute carnage out there this week, and all because of what the government are calling a mini budget.
A mini budget turned maxi, the biggest tax cuts in half a century.
With most of the UK-based finance YouTubers already discussing and breaking down the mini budget, I thought we'd look at exactly what this mini budget could mean for you and your finances. There's a lot of pressure on the government at the moment from people like the IMF who are asking them to re-evaluate this mini budget, suggesting that it could have some serious negative consequences on the United Kingdom as a whole. That said, the Prime Minister and the Chancellor have both defended these changes, and I think that we will see these changes come into effect in the coming months. It's important therefore to understand the impact this is going to have on you, your finances and the wider economy. So let's jump in and have a look at some of the changes and what that means for you. The new government views cutting taxes as the best way to deal with the UK's growing economic problem. We did kind of know that this was coming because during the leadership campaign, this was one of the main promises that the new Prime Minister made. However, I don't think any of us quite expected the large-scale cuts that we've seen, with £45 billion in tax cuts. Now that's the largest tax cut since 1972. These tax cuts are designed to help households with the current rising cost of living, increase economic growth, and to reduce inflation. What a world we live in. Last Thursday, the Bank of England increased the base rate by another 0.5% to try to tackle the worst inflation we've seen for 40 years. The base rate is now sat at 2.25%, which is causing widespread concern over the mortgage and housing market. On the same day all of this happened, the pound sunk to the lowest level since 1985. Causing worries over the financial structure of the United Kingdom as a whole. To add to this, the markets did not react at all well to news of tax cuts, with the FTSE 100 pulling back by over 2.5% on the day. This is essentially wholesale change to the way the United Kingdom taxes its people and its companies, with only two notable exceptions being inheritance tax and capital gains tax, which were both not touched by this new tax update. Some of the largest changes come to income tax, corporation tax, stamp duty and national insurance. Let's hop in and see exactly what they've done. We'll start with income tax. There were lots of people out there who thought that instead of reducing income tax, the government might actually increase the threshold by which people would start paying income tax to around £15,000 rather than where it is at the moment at around £12,500, but that was not the case. What they've essentially done is bring forward the 1% reduction in income tax that Rishi Sunak discussed earlier in the year that was meant to come into effect in April 2024. This has now been brought forward to April 2022, where income tax will reduce from 20% to 19%. But this is still over 6 months away, meaning that families and households will have to last through the winter with rising energy bills without the positive effect of this tax cut. They're essentially shutting the stable door after the horse will have already bolted. People are going to struggle this winter, and having a 1% reduction in tax in April is not really the help that people were hoping for. In a far more controversial step, the 45% additional tax rate for earners over £150,000 has been completely scrapped. This now means that anybody earning over £50,270 will pay 40% tax on that additional income, no matter whether they earn just over that £50,000 or over £1 million. This will all come at a substantial cost to the government, meaning that the government will have to increase its borrowing at a time that we're trying to reduce inflation. It seems a little bit counterproductive. So on to the good news. If you earn over £12,570 and you pay income tax, you will benefit from the 1% tax reduction that's coming in April 2023. This is predicted to make the average person around £170 to £180 better off every single year. The thing that's going to frustrate a lot of people here is the removal of the 45% additional tax rate, which will only benefit around 500,000 people, but it will make them around £10,000 on average better off every single year. At a time where working families are really struggling, that is a bitter pill to swallow. Of course, I'm primarily an investing channel, so it's also worth mentioning the reduction in dividend tax. Now, this is of course a benefit to anyone who holds dividend-paying companies or ETFs outside of an ISA and earns over £2,000 in dividend income in a financial year. Essentially, what the government have done is removed the 1.25% increase in dividend tax, which was going to take it to 8.75%, and move that back down to the initial rates of 7.5%. So if you are holding dividends outside of an ISA and earn over £2,000, this will also benefit you. National insurance has also been impacted by this mini budget, and the Prime Minister has actually fulfilled her promise to remove remove the increase in national insurance that came in April of this year. From the 6th of November, both employers and employees will save 1.25% on national insurance contributions. This will give a slight boost to people's pay packets as well as corporate profits. Because companies would have already had to budget for this increase in national insurance, I guess the hope here for working people would be that companies will pass some of that saving onto its employees in the form of pay increases. But of course, we all know that's not going to happen. This means that employees will now pay 12% on any money earned between £12,500 and the £50,000 tax threshold, or near, and it makes no difference. Employees will also pay an additional 2% national insurance on anything over the £50,000 tax threshold, with companies paying 13.8% national insurance. This change is set to affect over 26 million people within the United Kingdom, making them £330 on average better off every year. Again, with all of these tax cuts, it's about economies of scale. With these tax cuts and this national insurance reduction, impacting everybody, but being more beneficial to those earning higher wages. There's also going to be a massive shake-up on property, with stamp duty also being reduced. The threshold where no stamp duty is payable has essentially been doubled from £125,000 all the way to £250,000. This is a substantial change that will mean home buyers could save up to £2,500 on purchasing their home. And if you are a first-time buyer out there, the benefits are even more substantial. The threshold by which you don't pay any stamp duty is being increased from £300,000 all the way up to £425,000. This change will impact loads of home buyers out there, with the government estimating it will affect 200,000 people in the next year. There are concerns around this one because of inflation, of course, and by stimulating growth within the property market, that could exacerbate any inflationary pressures on the market. There is, of course, a little bit more to it than just that. Yes, house prices could increase because of this change, but with rising interest rates, affordability is getting more and more challenging for people out there. Some people's mortgage interest rates have increased exorbitantly over the last few days. Just check out this one.
I was told my initial interest rate would be 4.5%, and I was told today that the lender has pulled that offer, and now the best offer that I can get is about 10.5%.
Wow.
Yeah, and they're saying that, you need to immediately look at sort of putting your application through, because if you don't, the lenders may even pull these offers. And for me now, as a first-time buyer, I don't think I can now afford to get a mortgage.
I mean, that really is shocking. I don't think there's anybody out there who could viably pay over 10% in mortgage interest every single year. The final cut we're going to talk about is corporation tax, which was due to increase to 25% in April. This increase has now been completely removed, and corporation tax will now stay at 19% from April onwards. The changes here are set to impact any private limited company with profits of over £50,000. An example here would be if a company made £1 million in profit next year, they would save £48,000 in corporation tax by this reduction. So there really are a lot of changes happening to the tax system, and yes, it will benefit absolutely everybody out there who's earning over £12,570 a year. However, it will substantially impact those on higher wages more than the people who really need it. I think under normal circumstances, people would be celebrating tax cuts, and it's unusual for people to actually have the opposite opinion of the fact. But tax cuts at a time like this, with rising inflation putting more pressure on the government to borrow money, and with a falling pound, it really doesn't feel like the right time to roll out these changes. Realistically, households need help now, and for these changes to come into effect in April, it does seem a little bit too late. In one of my recent polls, around 80% of people were seriously worried about these changes coming into effect. So please do let me know in the comments below what your thoughts are on these changes and how you feel it's going to affect your finances moving forwards. This winter is definitely going to be one of those times where people have to consider how much they can actually continue to invest, and perhaps having to reallocate their cash to paying down high interest debt or just to pay for gas, electric and food is a serious concern for lots of people out there. Therefore, if earning extra cash every month would be beneficial to you throughout this time and throughout this hardship, check out this video next that will help you earn between £400 and £600, potentially more, every single month by using bookmaker offers against them.